In today's video, I'm going to be having a look at the gold outlook via a number of questions that have been asked by some of our viewers. Risk on, risk off for gold is an interesting way to think about things. Generally speaking, when investors are thinking about being a little bit risk off, they invest into gold. Now, for me, in 2021, I do see the price of gold rising, but this is generally because of the absence that we're getting from bonds overall, particularly in 10-year treasuries. The reason behind all of this is obviously related to a little bit on the inflation side and obviously the money supply as well. But with the absence of bonds having any real yields, we are likely to see gold prices remain an attractive investment. Inflation levels at this point in time for 2021, I'm expecting to remain subdued. We have an idea of there being constant quantitative easing and more support required for the economy, whilst as well also keeping their interest rates down. We also have to remember that we are likely to see inflation run a little bit hot, particularly in the US, where they want to see it run above the 2% target that they have actually announced. Now, if we historically look at how inflation has been growing over the last several years, perhaps even the last decade, there are a number of countries who have struggled to really get to their inflation targets, notably Japan, who have been struggling with low inflation for a very, very long time. Now, that puts a little bit of a dampener on where things might go for gold, but regardless, when you actually look at gold versus inflation, they don't really actually correlate. So overall, we could actually say that whilst it's not tied, yes, there will be some effect, but it's more about where people are interested in throwing their money. Now, when you don't have other asset classes, and particularly in this case, the US dollar, which is driven by the US inflation levels, will end up pushing the prices of gold up when you have a less valuable US dollar. If you think of those haven currencies that we generally like, that will be where the impact lies. When we look at gold prices across the board and where they are in relation to other assets, in this case the US dollar, we tend to find that people move their money or move their funds and their wealth towards products that are going to stay safe. This is usually seen in times of economic uncertainty, particularly during recessions. So this year in 2020, when we've seen a pandemic hit, we've seen stock prices starting to collapse, yields fall in value, and a number of other asset classes struggling to get any real form of growth, you tend to find that gold will be the one to go to. And the reason for that is that if you think of them as haven assets or places you can keep your money safe or at least your wealth safe, then you are limited with those options. Generally, you would look at bonds because at least in a bond you get a dividend and it's calculatable via the yield percentage. You would also put it in US dollar, which has traditionally been quite a strong currency and generally maintains its value. You would also see it going into sometimes the Japanese yen and a number of other asset classes, but gold has always been a top contender. And the reason being is that whenever you see a devaluation in gold, a devaluation in the US dollar, or perhaps even in the yen, then you would generally see an appreciation in the gold value as people move their funds that they had in US dollar or in the Japanese yen or perhaps some in bonds, and they move them out of those. When they start losing value in one asset class, they move it to another where they know that they can keep their value out of it. Of course, the disadvantage to gold is it's a little bit more of a speculative instrument than what you might find in bonds. Bonds you can look at and get that yield, that growth, that return, the dividend, however you want to look at it. Whilst in gold, you're really looking at an increase in value to get any return out of it. Luckily for us, gold is a very old asset class and an item that has been, used for a number of years, more than several thousand years. So when we look at gold, we know that there has been some level of retaining its value even in times of uncertainty. So this is something to keep in mind. Even though you aren't going to be getting the dividend, you might be actually getting a little bit of an increase in value that rises to the economic uncertainty of the time. The vaccine rollout shouldn't really, whilst it will impact gold, it won't impact it directly. I think what we're likely to see happen is that we will end up having gold lose a little bit of value. Investors will move their money out of gold. And we have to think about this from the risk on, risk off sort of sentiment side of things. If you have a vaccine rollout go successfully, you have markets and economies reopening again properly, trade starts to increase, domestic travel and international travel starts to increase. So a lot of companies, businesses, and definitely things in the more riskier side of asset classes such as stocks we'll probably start to see a little bit of a benefit, particularly in those things that are considered to be value or cyclical stocks, where you might look at energy sectors, transportation, holidays, retail sales, all of those sort of things that require a face-to-face engagement to actually make an earnings or revenue to turn over, will likely see some benefit. So investors now a little bit more confident in the fact that the world is not going to be stuck in a lockdown where we've got, a very suffocating economy occurring or suffocated economy occurring, then you may very well find that in this instance, people will be feeling confident about where the prospects of some of these riskier assets are. And instead of keeping the risk-off sentiment and holding their money in gold, they'll move their way and slowly migrate much of their portfolio, or at least a larger portion of what they have in gold, towards some of these other asset classes that do have a little bit more of a prospect for a dividend, a good set of growth, and a little bit of value. A big catalyst for that sort of nature, I think one of the ones, it's a topic that comes up every now and again, and you do hear about it on a regular basis, and that's actually probably the debasement of the US dollar as the world's reserve currency. Now, if we do end up with a mixed bag of reserve currencies, being that you may end up with the US dollar, the Japanese yen, the Chinese yuan, or even the euro, you might find that it's a bit of a basket case of a number of different currencies, if that scenario was to apply. So far, there's not been enough evidence to suggest that may ever happen, but if it was, then that would definitely put in line people feeling a little bit uncertain about how currency transactions might be being conducted in the near term and how FX markets might respond. So you may find leading up to a debasement that people will move or price in the idea of gold, which would very quickly rise in value. Additionally, outside of that, of course, if we do start seeing inflation running into more problems, i.e. we start getting the counter opposite of hyperinflation, we get more inflation much more subdued and a little bit lower, then you might see people moving their funds towards gold again. I suppose to a certain degree it does. I don't think the amount of gold that they dig out of the ground is really going to impact the prices of gold. And in general, every piece of gold that is above ground and has been dug out of the ground stays above ground for a very, very long time to come. I suppose what you might find from TV shows like that would really be coming from the spread of information about how it is mined to perhaps unsophisticated investors and those interested in the show that might change their view, or I suppose inspire them to start investing in gold a little bit. So you might find that whilst it may not have a direct influence and it may not be a huge influence, it probably does have some level of influence over the investor themselves, or someone who might be new to the market, who may eventually decide to buy gold because of a show like that where they see that there is some value in it. Outside of that, I don't see those sort of shows really doing much other than drawing attention to the precious metal. Okay, one of the things that I am keeping my own eyes on, and I think this will be important to the demand for gold. Throughout this year, jewelry has not been very big. It's very difficult to size up someone's finger when you don't have the finger to try it onto. And of course, countries such as India have been struggling who use gold a lot, especially in jewelry, have been struggling to get those sort of products out. So whilst gold, has always got a level of demand, and has probably seen a large amount of demand due to the introduction of, new ETFs that focus on gold and gold mining, I think there is still promise for it to see a little bit more expansion, considering, we've had the jewelry industry not exactly running at full capacity this year. And when you have nations like India that do have a high degree of demand for gold on a retail sort of basis, and that jewelry and the nice sort of precious, I suppose, pieces that you would keep presented in your home or on your body, would definitely see a little bit of an increase in value across the whole gold market from that. The demand goes up, the more transactions get across, and it goes along. The caveat to all of this sort of thing and the idea of gold going up in value really gets driven by the central banks. If we do see, the current forecasts from central banks play out, then the chances are gold will stay valuable for quite some time. If we don't see it staying that way and the forecasts do change, inflation starts to rise, and we start to see interest rates getting increased to try and combat inflation by this stage, to try and keep it lower, then we may very well see that companies that we will see this sort of value of gold start to decline, particularly as central banks interested who do hold gold, and generally most central banks hold a lot of gold, start to offload some of that gold. I think at the max, well, they've got a bit of a gentleman's agreement between all central banks of the globe where they won't sell more than 400 tons or something along those lines at each time. So, I would consider that would be one of the bigger impacts of the two, but it will all rely on how well the economy recovers.